Let us get to the October jobs report, blowing expectations out of the water. A gain of 271,000 jobs versus the estimate. The expectation was 180,000 for October. Now, with such strong economic data, is this the final nail in the coffin for zero interest rates? Let's get right to the floor show. Traders at the New York Stock Exchange CME Group, and also joining us, Gary Burnison. He's Korn Ferry CEO. He places top professionals in top jobs that pay pretty well, right, Gary?
That's right. Not as much as you, Liz, but pretty well.
Yeah. Hey, I do my best to create jobs here, certainly. But let me start with Teddy Weisberg. Here we are, 8 hours later. You know, whenever this 8:30 a.m. Eastern is when the number came out. We've got 1 hour to go, and markets still don't know if the great jobs report is good news. Why not, Teddy? I mean, a gain of only 7 points for the Dow?
Well, I think it depends on how you feel about interest rates going up, because clearly, you know, this could be, as you suggested, the nail in the coffin in terms of the Fed moving forward in December with a rate increase. They've done everything but assurance that they're going to do that. And we immediately saw the financial sector all start to do better. The big banks, insurance companies, brokers, rest of the market flattened out. Quite frankly, I have a scenario where I think any move in interest rates is going to be a negative for the market. I don't think it's priced in. Much too long a scenario to go into now. But clearly, anything that was interest rate sensitive went to the green immediately. The rest of the market sort of flattened out. Yeah. And, you know, it wasn't entirely the reason for the sell-off last summer, but clearly the prospect of higher interest rates hurt the market.
Teddy's right. Look at financials, and we can show some of the big bank names that all did very well. Why? Because when you do that, banks borrow short-term, they lend long-term, they can capitalize on the rates that they will be getting. But take a look, Dan Stecich, at two names I checked, and that's TD Ameritrade and E-Trade. They keep a lot of cash on their books. They would love higher rates. Both of those names, at least earlier, were moving higher. Look at E-Trade up 5 1/4, and you have Ameritrade up about 3 1/3%. So clearly, it looks like the potential is there for a Fed rate hike. What's your best guess here? Because this is a good enough number for jobs that I don't know what else Yellen can look for.
Well, this is a good enough number. It was a very strong number, but we've seen this in the past. Now, you have to remember, before the next FOMC meeting, we have another employment figure.
December.
The November jobs report will be coming out. So let's pay attention to that. If that number comes out weak, then it might give them pause. But at any rate, this number by itself looks very good. Let's see what the data brings us. We got another 5 weeks before we see what goes on. If the data's strong, the Fed will definitely tighten.
A lot of ifs there. We know all the numbers come out. I want to get to Gary, because when I started to look through the jobs report number, I saw that you saw white-collar jobs jumping 78,000. These are professional jobs. Healthcare up 45,000. How does this look to a guy like you who's looking to place real professional executives in top positions?
Well, it's, you know, listen, I'm not jumping up and down saying kumbaya. I mean, the number could have been 150,000. I wouldn't have changed my outlook. You know, it's all about science and technology and engineering, and it's not about getting a degree in history, right? That's the reality. And so we're moving into a service-based economy, and that's where we are.
A service base, so we saw a gain of 44,000 in retail, 42,000 in restaurants. But what are you seeing? I mean, are people getting the jobs that they want, Gary?
Well, I think what you're seeing is people are working longer. So 3/4 of you know, the population are going to work past 65. Younger people are having a very difficult time. My daughter just got a job after college. She's making $11 an hour. You know, that's what I made 30 years ago. I think it's very tough still coming out of college. And you've got, you know, people working longer, and that tends to block the, you know, the funnel. But consumers aren't spending. So for CEOs like myself, you can't pass on price increases. People really aren't spending money. The participation rate's incredibly low. So, you know, this is kind of what I expected. And I think we're going to see this for some time.
Yeah, and maybe, Teddy, that's why the markets don't appear to be jumping up and down. But I would go with Dan. I would say that it's because everyone's nervous about a potential rate hike, and we know it has to come sooner rather than later, Teddy.
Well, yes, we all agree, I think, about that. But, you know, the big difference is, Liz, we have a market that's tripled in value with a backdrop of zero interest rates for 6 going on 7 years. So what is the market to do? I understand the scenario, the economy's doing better, but the fact is the world's economies are flat and our economy's just doing barely better. I think raising interest rates signals a change in Fed policy, which signals a problem for the stock market.
Well, maybe short term. I believe the stock market has to grow up at some point. Hey, it's great to see all of you. Teddy, Dan, Gary. Teddy, don't retire at 65.
Yeah, can I get a job? I'm 75.
I know. That's why. Listen, I hand off the joke to you. You take it. Good to see all of you. Thanks.